I will show you a strategy that allows me to earn 10 to 15% trading Forex every month. This strategy is based on market structure and I trade against the trend. It looks like this. I look at the market structure on the 4-hour time frame, and as we know, the market structure is determined by creation of new highs and lows. Standard market structure looks something like this. We form a new highs and new lows. For example, let's say here we have a higher high, here is a new higher high, highs are updated, and low also, like this. So this is how the standard market structure looks like. We form a new highs and new lows in the upward direction. A new high is bigger than previous. So we figure it out. This is an uptrend. Now, how do most people trade? Most people trade in the direction of the trend, and when the price has formed high and gone into this range, they start looking for an opportunity to buy here, like this. We will do it a little differently. We will wait while the price form a new high or a new low if it's a downtrend, and here we will look for sells against the trend, something like this. So why we are going to trade against the trend and not according to the trend as in general everyone does? And I will try to explain it to you. So in most cases when the market creates a new range and returns to this range on a rollback to continue the trend, it is consolidate here. Something like this. It consolidate and stay here for a while, only then it goes up. And it is for this reason that I decide to slightly change the rules of the game and trade on the contrary, against the trend. Because it is in this consolidation, when you try to trade in this consolidation, you get a lot of losses before you get the main profit, the main trading plus, and in most cases this trade doesn't even recoup the losses you got here. But if you trade against the trend, it will look something like this. We see the first impulse. Here we are waiting for the reversal formation and confirmation on the 15 minutes time frame, and after that we have a big momentum into the middle of the range. It looks like this, and the advantage of this method is that we rarely, very rarely consolidate here. That is, when we form a new range here, we need literally one more confirmation and price immediately fell inside the range. And this allows you to get less losses and more profits. The ratio of losses and profits is much better than in standard classical trend trading. Therefore, we will look for such moments. After creating a new range, we will always sell against the trend. So, let me show you some examples. We are on the 4-hour time frame. Each analysis starts on 4-hour time frame. We look at a new range, a new impulse. Let's call it like this. Here we have formed, for example, a new impulse, here we have low, here we have high, and we mark this impulse using the Fibonacci ruler to determine the premium and discount zone. In the premium zone, when we formed our high, we got confirmation on the 4-hour time frame. I will explain you little later what kind of confirmation we need on the 4-hour time frame and what kind on the 15 minutes time frame. After receiving the confirmation, we will sell to the discount zone. That is, in principle, our take profit can be below the discount zone. This is no problem, but after we have reached the discount zone, we are no longer looking for a sell in this cycle. This cycle is over for us. If the price touch level 50, done. We are waiting for a new impulse, a new range. So what kind of confirmation are we waiting on a 4-hour? Here I draw a small pattern of what it looks like on a 4-hour time frame. Suppose that the market goes up, form the range, this is the last bullish candle, and we must wait for a one bearish candle. It does not necessarily have to close below the preview candle, but it must be bearish. So after we got the bearish candle, we can already go to the 15 minutes time frame and find the entry point. The entry point on the 15 minutes time frame looks something like this, and a little later I will show you in more detail. But on a 4-hour time frame it looks exactly like this. It goes here, hit this liquidity and returns back. And here approximately is our entry up to the 50% level and discount zone. It can also look like this on a 4-hour time frame. We have, let's say, a uptrend, we get one bearish candle and then another bearish candle. but at the same time it does not reach 50% level. If it has not reached discount zone, then our setup is still valid and we can use it. We have two bullish candles which collect this liquidity, and here we can find an entry on the 15 minutes time frame. Let's move on to the entries on the 15 minutes time frame. This is how the entry should look like on the 15 minutes time frame. This is exactly the same thing that happens on the 4-hour time frame. But the only difference is that here we are entering the trade and we have to understand where exactly we are going to enter. Personally, I enter after liquidity has been collected. In this case, with this candle. I enter after breaking the low of the last candle. That is, right here I set a stop order and enter a trade with a 1 to 4 risk to reward ratio. Liquidity has been removed. If the price closed below this maximum, we can enter the trade immediately. I teach more about entries in my course, the link will be in the description. We also talk about psychology, market structure, the best time to trade because we trade at a specific time when the market is most volatile. Also here we will learn how to calculate position size correctly and as quickly as possible. You will also get additional indicators for TradingView and MT4, which will help you to analyze the chart easily. More than that, you'll receive individual support from me. We will be in touch and I will help you along the way. The link is in the description. So let's move on. As on the 4-hour time frame, the pattern may look different, but its essence does not change from that. We see that here we also collect liquidity, but at the same time we collect liquidity not in one candle, but several. And only after that we broke the low of the last candle. I draw this example so that you can understand that the market is always different. It is not the same, so you need to know the logic and use it in the situation that you are in at the moment of trading. Because market structure are different and you need to be as flexible as possible. I also talk about different patterns in my course. So we figure it out. Let's move on to the examples and I will show you how this can be used. The first example we see is on Euro USD. We see a clear downtrend. We form a new lower lows and new lower highs. And in this case we have a new range, which we mark from high to low and get the 50% level. After we got the first bullish candle, we can already go to the 15 minutes time frame and find the entry. We went to the 15 minutes and let's see what's going on. Asian session started. We see that liquidity has already been taken, but personally I do not trade Asian session because at this time I am still sleeping. So here I start trading in the London session. Let's go to the 4-hour time frame and see that our range was not broken. Range is still active for us and we can use it. So here we see that we have collect liquidity during the London session and we wait for the formation of the pattern to buy. Patterns can be completely different and I talk about the entry models that I use in more details in my course. You can use absolutely any, but before that you need to backtest and see which one works better. We sweep the liquidity, hit the liquidity during the London session. Then we see first bullish candle, which show that we have buyers here. At this point we can already buy it. Place stop loss below the last candle and profit target 1 to 4 risk to reward. This ratio always to consistently make profit. In this case we are just waiting for the take profit. And we see that at beginning of the New York session our take profit was reached. Let's go to the 4-hour time frame and see how it looks. We have a bullish candle. We come, take this liquidity and go inside the range. As you can see, it works great. Let's move to the next example. Next trade is also on Euro USD. We see that before that we had a downtrend for new lower lows and new higher lows. Now the last high was broken up and we got this range. After we saw the first bearish candle, we can already move to the 15 minutes time frame and look for the entry. So now we are in the Asian session. We are waiting for London. Here we see that liquidity was collected during the London session and all we need to do now is just wait for a pattern to enter a trade. The pattern I'm looking for is an engulfing candle. Here we see this beautiful reversal pattern and I got into this trade. I leave a little space for stop loss so that in case it returns, the spread does not take it. Set 1 to 4 risk to reward ratio and let's see. Also trade hit take profit in the New York session. When we got additional liquidity, it works out. As you can see, everything works great. If you follow the rules that I talked about in this video, you will definitely have good results. Well, if you want to learn how to use it correctly and get the result that I have, namely consistently 10 to 15% per month, feel free to use my course that I create for you. Also subscribe to my Telegram channel. Here I publish daily market breakdown and much useful information for traders, absolutely free. If this video was at least little useful for you, be sure to like it and subscribe to the channel. This will motivate me to make such video in the future and share my knowledge in this industry. See you in the next video.